Trading futures and options involves substantial risk of loss and is not suitable for all investors. Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Friday, October 3rd, and it was a bit of a mixed day in today's trade. A fairly exciting week, especially relative to how we started the week. Before we get into some of the markets and things that caught our eye, I do want to remind you, if you have not tried out a demo of our trading platform, Blue Line Edge, desktop or mobile, you can do so by heading over to bluelinefutures.com, checking out the trading platforms on that page, and then signing up for a demo. Here we have the basic quote board. You can build this out and it can be as customizable as you want, whether you just want grains and livestock or you want everything from ags to energies to precious metals, etc. You can customize that, and then trading from this is actually really easy as well. You just have these buy and sell buttons here that populates an order ticket. From there you can customize your orders how you would like. Now that we got that out of the way, we can go ahead and get into some of the charts and markets that caught our eye. Grain markets, obviously kind of my niche area, so we'll start with that. December corn futures, fairly uneventful start to the week, as I had mentioned. We made new lows for the move, dipped our toes below that 50-day moving average, and it looked like this market was just destined for another leg lower and potential retest of that technically and psychologically significant $4 level. But we were saved by a headline, and that spurred some momentum and buying back into the market, which got us back above the 50-day moving average, pressed us up towards the 20-day moving average, this purple line here, which is where we stalled out. So consolidation between these two moving averages is something we've seen in a lot of commodity markets recently, not just the grains, but other commodities as well. So we're looking at this as the new trading range going into next week's trade. Consecutive closes out above there. I think we could see additional upward momentum. That 100-day moving average is the blue line that comes in just a couple cents above the 20-day. But more importantly is that gap that we partially filled, which dates back to July. That comes in 430 to about 433. So if we're able to see some follow through above the 20 and 100-day moving averages, I think we could potentially tack on another 10 cents or so. On the flip side, a failure to get out above the top end of the range likely sets us back towards the lower end of the range, which happens to be that 50-day moving average. And again, we've outlined that in our daily commodity commentary. That's about 414 to 415. A failure there on a closing basis reopens the potential for a pullback towards that psychologically significant $4 level. So that's what we're looking at for the corn market into the weekend, and kind of just devising a game plan for next week's trade. And then over on the soybeans, a similar type of story. Got back towards the cluster of major moving averages in the mid-1020s. You've got the 20, the 50, the 100, and 200-day moving averages all coming in there, and we've kind of outlined that as an inflection point. We need to see consecutive closes out above there to kind of reignite some of the technical optimism to get us closer towards the top end of the recent range. A failure to do so likely sets us back towards that 1010 area, which has been kind of a gravitational pull area for the last week or so. Obviously, we got the headline earlier in the week with regards to China and the U.S. maybe kind of advancing trade talks here in the coming weeks with an emphasis on soybeans and agricultural products. Whether or not anything comes of that, I'm not sure I'm going to be holding my breath for it, but it does reignite some upside potential there, upside risk that something does get done or there is some negotiation there. So something to consider. Harvest continues to pick up across the Midwest, so harvest reports will continue to be watched closely, and maybe even more closely, especially with the USDA government shutdown and suspending some of those daily and weekly USDA reports. So that's what we're looking at for the soybean market. And then lastly, we'll just hop over to live cattle real quick. We talked about those moving averages being important, and here we are in the live cattle market. We've got December futures pulled up, trapped right in between that 50-day as support and 20-day as resistance, which has led to a week-long consolidation phase and what's turning out to be a little bit of a wedge, potentially building up energy for a bigger directional move. Fundamentally, the recent trend has been softening cash markets, which does give the bears a little bit of an advantage here into the weekend and into next week's trade. What the bulls would want to see kind of negate that is a breakout in consecutive closes above the 20-day moving average to get us towards trendline resistance. A failure to do so and a failure here at trendline support opens the door for long liquidation. The CFTC, Commitment to Traders report, that's been suspended due to the government shutdown. But funds in live cattle have been really flat for the most part for the last 3 months or so, right around 120, 130,000 contracts. And looking at this week's price action, I don't think that that was enough to really spur the funds in any direction. But again, if we do break and close below that trend line support there and 50-day moving average, potentially that's what shakes the trees. Now, conversely, as far as fund positioning goes in feeder cattle, we've started to see a lot more liquidation over the last several weeks in that weekly report. We won't get that this week, but you could probably imagine that the funds are probably starting and continuing to tighten up their position on that front, which has been the trend. So that's kind of what we're looking at heading into the weekend. If you have any questions over these markets or any other markets, don't hesitate to reach out to our trade desk. We are ready, willing, and able to help. And again, one more reminder, if you have not tried out our desktop and mobile trading platform, head over to bluelinefutures.com. You can get signed up for a demo there. If you have questions while you're going through it, don't hesitate to reach out. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.